Okay, everybody, so welcome to Strategy 7 within this first series of webinars. And what we are going to introduce in Webinar 7 or Strategy 7 and Strategy 8 is to try and cater for those of you that have the temperament and the personality whereby you want to trade off longer time frames, possibly not need the help of the Telegram channel, and I think that's great. So hopefully we can introduce to you some multi-time frame opportunities. So when I say multi-time frame strategies or opportunities, we are looking to identify trading opportunities on your higher time frames, whether that be the 4-hour, the daily chart, whether that be the weekly chart or the hourly, and then taking a trigger on the lower time frame. Okay, so on this particular strategy, guys, we are using two indicators. We're using one moving average. This particular moving average is different in that it's a longer time frame. What you'll see here, and let's just illustrate it to you quickly. This is probably something that a lot of you have read about over the last couple of years, and that being a 200 moving average. Okay, so a long-term moving average, and what you'll see is that a lot of these are going to be somewhat smooth. So when I say smooth, you'll see a moving average that is relatively flat. Okay, and that's pretty standard. The longer the parameters that we are using, the smoother that moving average is going to be. So it's pretty self-explanatory, and again, we are using a simple moving average. Okay, so guys, this is a very simple strategy. We are going to identify our trade using that moving average and that moving average level only. Okay, and we'll then drop down onto the 15-minute chart and use a stochastic in a very similar fashion as what we illustrated in strategy 4, I believe it was, to look for the identification or the execution of the trade. I think is probably a better way to say that. Okay, so first things first, guys, I'm always going to start on the 4-hour chart. Okay, so what we can see here is if we have price above this pink line, that means I'm looking to go long. All right. If I have price, for an example, below this pink line, below the moving average, that means I'm looking to go short. Okay, so above the pink line, looking to go long. Price below the pink line, I'm looking to go short. Okay, so those are the key aspects that I need to look for. Okay, second thing that I'm looking to identify is the 4-hour chart and the hourly chart showing me a very similar picture. Okay, so if price is below the pink line on the 4-hour chart, I need it to be below the moving average on the hourly chart. Likewise, if price is above the 4-hour chart on the 4-hour chart, I want it to look very similar on the hourly chart. Okay, that tells me that both the medium-term trend and the immediate trend are in a very similar aspect. So both looking to go short on both of them. Okay, so let's start off with the DAX. First thing on the 4-hour chart, I can see price is above moving average. Okay, so that's fantastic. And what we'll do is we'll do Friday, guys, because Friday is an example we can see. So this is Friday here. So on Friday, we are above price. So on my 4-hour chart, it's telling me I should be looking to go long. What I want to see is on the hourly chart, is it showing me or telling me something very different? And in this instance, it's exactly the same, guys. So it is telling me on the hourly chart here, I'm above the pink line, so I should be looking to go long. Okay, my 4-hour chart and my hourly chart, both above my pink simple 200 period moving average, both telling me I should go long. And so that will be what I'm looking to do today. I'm looking to go long the DAX. Okay, now at this point, and we can quickly pop that on there, we can go on to the 15-minute chart, and I'm now looking to use this in exactly the same way as we're using for strategy 4. Okay, I'm not too stringent when it comes to probability. Anything around a 70% probability, I'm happy to trade. If I have a look here, I'm waiting for my moving average within my stochastic, okay, to show a 70% crossover. So there you can see that's a 75. You can see the signal line. That's my probability. 100 minus 25 is 75, which says that I'm happy to go long. Okay, so that's my first indication. What is the trigger here? The trigger is a moving average crossover. So the blue moves through the red line. And there we can see it there. That is the crossover. Once that crossover occurs, I'm happy to take a trade on the very next candle. Okay, so there you can see it crosses over. There is my entry. Okay, so 131.90. Where would my stop loss be, guys? Okay, you would be 100% correct if you said you would prefer to use our previous lows and highs as support and resistance, which means that I would use my previous low. Okay, so that's 131.20. Let's just round it off there, and so our entry was 131.90, just to round off for ease of mind. Okay, so here, guys, my entry here is 131.90. I'm using my previous low or support as my stop loss. So my stop loss is 131.20. The difference between this, guys, is 70. So therefore my R equals 70. I'm looking for a 1R, which means that 1 times 70 is 70. So my take profit would be 70 points. Okay. Which means that 131.90 plus 70, my exit price is hopefully going to be 132.60. Okay, we can pop that take profit immediately onto the chart. All right, that allows us to see where our exit would be. Okay, so here we can go 132.60. Unfortunately, we had to hold on to this overnight, but as you can see, we eventually got out at a nice 60-point take profit. Okay, to illustrate a short trade opportunity, guys, this is the pound Kiwi. We can see 4-hour chart, my price is below my pink moving average. Okay, what does that tell me? That tells me that I possibly should be looking to go short, as long as my medium term chart on the hourly chart tells me the same thing. So I immediately pop down to the hourly, and as you can see on Friday, we did have that situation where price was significantly lower than my pink moving average. Okay, there's my pink moving average there. So short on the 4-hour, short on the hourly. I can then drop down to the 15-minute chart and start looking for some short trades there. Guys, if the price was above the pink line on this particular chart, didn't equal the 4-hour chart, I would definitely walk away. Okay, so at this point, we can drop down to the 15-minute chart. What are we looking for here, guys? We are looking for something that gives us an opportunity. I'm just going to take this MACD off here because it has no purpose here. What we can do is quickly pop on strategy 7. Okay, so as you can see, I was looking to go short. We got a short trade late in the evening, which is pretty standard for a Kiwi pair, because they are so far ahead of us in terms of time zones. You can also see that we are seeing some momentum starting to slow there. Okay, so what would my entry be, guys? Okay, my entry would be the crossover on the stochastic, which we can see right around there. Okay, so that is our first indication that I'm ready to go short. Again, this is going to be a trade that I'm going to have to hold overnight, unfortunately, because the trade came so late. But here is my entry. Okay, 192.07. Where would I put my stop loss? Above the previous high, just above. Okay, so let's round these to 192, the figure, and 192.50. So what that means is my entry equals 1.92. My stop loss equals 1.9250. Okay, the difference between that, guys, is 50 points, which means that my R equals 50. In this particular strategy, again, we're looking at 1R, so that being 1 times 50, we're looking for 50 points as my take profit. Therefore, my take profit, or my exit target, is 1.9150. Okay, so pretty self-explanatory. Equation, and let's just pop that in there quickly. 191.50, and there you can see we got out first thing this morning at our 50-point take profit. Okay, guys, so there you can see on this particular indicator, using something very, very simple, using just a 400, let's just pop that on there quickly, just a 200 period moving average on both the 4-hour chart and the hourly chart allows us to identify a trade. At the same time, guys, it also allows us to get into a trade on the 15-minute chart using a simple moving average crossover, and in that way we can then use the same risk management system. Okay, so for those of you that don't want to use the Telegram channel, guys, this is just an introduction to what we can start to experience in the Series 2 webinars, whereby we have a self-identification. You're not relying on that Telegram channel. So we're using multiple time frames in this particular strategy, a 4-hour and an hourly to identify, and then using a moving average crossover on the 15-minute chart to execute the trade. Guys, I think this is a wonderful strategy. Again, it's got a built-in risk management system which allows you to not only identify support and resistance as stop losses, but also gives you an equation to find and take profit. Alrighty, guys, there you have it. Thank you for joining us for the first series within this strategy sessions. If you go through all 7 of these, I'm hoping that you'll find one that makes sense to you. I'm hoping that you'll find one that you really, really enjoy, and hopefully by doing that, you can get well into your way to becoming a consistent and successful trader. Okay, as usual, guys, I would encourage you to start off on the demo accounts, get comfortable with the strategy, get it consistent, and only once you are consistent on that demo account would I consider trading live. Okay, guys, thanks again. We will see you in Series 2.